How's it? Welcome to the lockdown edition of Market Analysis with myself, James Preston.
And myself, Graeme Tennant.
This is the lockdown edition. It's the first day of lockdown here in South Africa, so we're all working from home, and interesting times indeed. Of course, let's get straight into it. Graeme, it is quite a significant moment in history, of course, with where we're going in, with the financial system. I want to just go through a couple of the traditional financial markets. We've obviously seen significant volatility in those markets. We've seen zero interest rates, and then a massive stimulus bill was agreed upon yesterday, which has seen a jump from traditional markets. Technically, what do you see to come?
So, I mean, obviously we've had a really big sell-off. It was, I've seen a couple comparisons to other bear markets, and this has been one of the most violent sell-offs that we've ever had in equities. They're comparing back to, the 1929 stock market crash, 2008, 1987. So, this is definitely one to add into the textbook. But I think that one of the, big things to note here was just the velocity that the market fell at. So here you can see the market's fallen 35% in just over a month. And we have now bounced quite significantly from the bottom there, and we could say we're now up 17% since the lows. But this is to be expected. So, I mean, many of your biggest moves to the upside come in significant bear markets. Because of the added volatility that you have, and you do have that market moving in a volatile manner in both directions. So it's just completely flawed in my mind if anyone's trying to say that that we've bottomed out, and if they're looking to pile into equities, well, I'm definitely not one of them. So, and I mean, this could quite easily be there's different names for it: a bull trap or a dead cat bounce, and time is we just have to wait to see how this is going to play out. But my feeling is that the highest probability is that we're entering into a longer-term bear market, and this is potentially the first bounce of that bear market. And in a bull market, you look to buy the dip, and in a bear market, you look to sell the bounce. So if you're asking me what my bias is here, it would definitely be to sell this rally rather than be looking to get long on equities.
Now, a couple of the others there. What do you want to take us through first? Oil?
Okay. So let's look at it quickly. So what I think is really interesting, and you need to I think it helps a lot to have a look at traditional markets to understand where we sit in Bitcoin. So that was the equities. This is the dollar currency index. So this is shows you the strength of the dollar versus a basket of different other foreign currencies. And Bitcoin's not included in here, neither of the commodities, but it still gives you a really good indication of how strong the dollar is. And remember, the dollar is generally your currency that people are going to run to in times of fear. And we can see the correlation here, that when you have the fear, you've got the dollar really shooting upwards. It's up 10% in
Amazing.
2 weeks.
It's almost an exact opposite. It's almost an exact opposite of the S&P 500 we've just looked at.
Exactly. So often people are saying, well, we got a big sell-off in this or that market. Where's the money gone? And in this case, the sell-off was in equities, and most of the money went into the dollar. And you'll see that the other commodities, along with Bitcoin, took pain at this point in time. It didn't matter if it was deemed a safe haven asset; people still wanted out. People still wanted to get their money in dollars. So that really is your first port of call. And I think that's important to consider when we talk about the safe haven element or conversation around safe haven properties of Bitcoin, and that's the fact that not only did Bitcoin take a dive at that point in time, but your gold and silver also took a big knock. So there's gold over a similar period of time. Gold was also down 12%. If we look at silver, it was even harder hit. We had quite an incredible sell-off in silver. So that was down 31% in 2 weeks. So you can see that this dollar strength was the big theme, and it affected assets across the board. So oil is a story in itself. And this is the juice of the economy, and this shows you what a problem the world is in when it comes to the demand for oil, which is the thing that drives the economy. And if prices are crashing, well, that's telling you a little bit about the health of the economy and the actual manufacturing capacity of the global economy. So just across the board, we're seeing a picture of bearishness. There's no other way to put it. So that's a quick flyby of the traditional markets. So yeah, now let's jump into Bitcoin.
Let's do it. So what does that all mean for Bitcoin?
Yeah, so for Bitcoin, I mean, this I think it can also almost be, we can give Bitcoin a little bit of cut Bitcoin a little bit of slack for the massive sell-off that it did have, which was now a week or two ago, where we did lose essentially half of its market cap in a very small span of time. And we got to remember still that Bitcoin is really a small market in the context of big financial, traditional financial systems. So when we do have shocks of this nature, it's not completely surprising that people are running for dollars, pulling their money out of Bitcoin and anything else, for that matter, as we discussed. So to see a big move in the market price of Bitcoin over that period of time is not completely surprising, and doesn't mean that we need to write off Bitcoin as a safe haven asset, because once that initial shock is over, and I think once the dust settles, and if we do now start to move towards a longer term bear market that is accompanied by massive quantitative easing and free and easy money along with low interest rates, which brings the question and the validity of fiat currency into question, that's where Bitcoin, along with your gold and silver, are really going to come into their own. So that's the picture that, the macro fundamental picture that I'm looking for. And we can see some of this come back, some of the buying come back into the Bitcoin market once that initial shock was over. Now,
we had a little bit of a sell-off yesterday, down from around about $7,000 to 6,600.
Yeah.
We've hovered at 6,600 for quite some time now, and a lot of people are feeling bearish. Where do you stand on the spectrum?
So I'm pretty much on the fence with regards to the short-term moves. So if you remember when we were first speaking about this big sell-off that we had, and people were kind of asking where from here, I felt that we would move between this blue, which is now a resistance zone, and the orange support zone.
Yeah.
And you can see that these red dotted lines are the levels in the market that the market is really respecting, and those are your key levels of significance. So just looking at the shorter term time frame, what we do have here with the blue lines is a rising wedge, and that is typically a bearish pattern. So yeah, I mean, we could move upwards from here. We are at a very significant level of resistance, which is the 6,800 level. So it's going to take something a little bit special to get through that level. We're going to have to get some really positive buying to push us up to higher prices. So yeah, I mean, I'm very slightly biased towards the bearish side here. I think that your slightly higher probability outcome is a spill to the downside out of this rising wedge, and yeah, I'll be quite pleased if we have that, because that means I can then pick up Bitcoin at lower prices for longer term accumulation. But again, anywhere between the 6.8 and 4.2, I mean, you forget what a big area that is. I mean, that's a significant price difference, but I still think any purchasing here for the longer term is a decent price for where I think Bitcoin will potentially go if that outcome that I spoke about earlier in traditional markets does materialize, and we do see continued weakening of traditional markets. We see fiat currencies come under pressure. I do think that Bitcoin is going to pick up some of that money looking for a safe home.
All right, well, there we go. Do you have a sort of area where you think a spill to the downside could end up finding support? Would it be that first significant price area of around $5,500, or you don't want to make a call at this stage?
No, so I think your first stop is the bottom of this blue zone. So it hasn't been terribly significant, besides the fact that it did give us some support here after the initial spike. So I think that's probably our first stop if we spill. Second stop will be at 5.5. So I'm definitely keen to, well, I've already got some limit orders sitting at 5.5, waiting to get filled if we do move to the downside. If we move to the upside in a very positive way, then I'll probably have to take those orders out and buy the breakout of the current levels that we're at. So I am watching things closely, but I am still looking to deploy more funds into Bitcoin for longer term accumulation.
And obviously nothing in the alt at the moment because of the market conditions. There's very little action to really take notice in any of the other altcoins.
Yeah. So one of the most significant things for me about the alts is that I'm just seeing such a high correlation between Bitcoin and Ethereum in particular, that I don't, so you're looking for an edge if you're going into the alts over Bitcoin, and right now I don't see that edge. It's almost like if you're buying Ethereum, you're just taking a leveraged Bitcoin position. So if I'm going to go into alts, it needs to offer me a different correlation to what's happening in Bitcoin. And right now I'm not seeing that. So until the alts start dancing to their own tune, and instead of to the beat of Bitcoin, then I'm not looking at that.
Which will likely be a very, very long time to come. So it's fair not to worry too much about the alts right now. Obviously there would be an
eye on it. I mean, things can change quickly. This is an evolving situation, and it's definitely worth keeping an eye on it.
Okay, well, keeping your finger on the pulse. Well, Graeme, thanks so much. Brilliant.
Yeah, and stay safe in lockdown.
Yeah, absolutely. And you too. Thanks for joining us on Zoom this week. And we'll catch you in the next episode next week.
Great. Thanks, James.
Great. So that's where we'll leave it for this week, guys. From myself, James Preston.
And myself, Graeme Tennant.
It's goodbye for now.
Cheers for now.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.